Brian, you trading these cryptos?
Not the little guys.
How about the crypto stocks?
Not as much.
Do people ask for like altcoin coverage?
No, because I've told them very clearly that I'm not going to get involved.
All right, Straza, today's a big day. We have one of our favorite trader friends in the whole community on the show today on the Off the Charts podcast. We got Brian Shannon. What's up, Brian?
Hey, Sean, Steve, good to see you guys again.
You know, we always have Brian as one of like the first people on every show we do. I feel like I'm saying this about Jay Woods and probably Brian Lund too, but like Brian's one of our go-to guys. Definitely my favorite mentor, somebody I've learned more about technical analysis from and trading than anybody. So this is a special one.
You just mentioned three old timers. That's what we have in common.
Brian, I heard one of the greatest compliments about you not too long ago. A few weeks ago, I heard this. The compliment was, if it wasn't for Brian Shannon, I wouldn't be here today. You want to know who said that?
No idea.
Steve Straza, right there, that guy.
Well, fantastic. Yeah. Steve came up to me at a CMT. First time I met him, he came up to me. I love telling this story because even after I tell this story, no one has done it since. And Steve came up to me at the CMT event and said, "Hey, I follow your work. I watch what you do. Let me ask you a crazy question. Would you be my mentor?" I was like, you know what? That's fucking cool. I like the direct approach. Just ask me. I said, yeah, I'd love to. So no one's done it since. It's crazy.
Uh-oh. Now people are going to be blowing your door down.
We always joke and say that, like, don't give out Brian's email. But why do you think that is, Brian?
I think people, you look at no ego about it, but I've been doing this a long time and I've been consistent in my message and what I do. And people look at that and maybe they think, well, he's too busy, he's inaccessible. I'm not going to waste his time. And, it doesn't mean I'm going to say yes to everyone that does it. But I think there's just that natural, respect of time maybe. And just a little bit of fear of approaching someone that you hold in high regard, if that's the case.
You can be intimidating. Sure. Right, Sean?
Well, it's funny you say that because Brian can be intimidating, but in all the best ways. Like one thing I love about Brian is whenever we talk trading, like he doesn't take any bullshit, right? Like if you start waxing and waning on some theory or some harebrained scheme, Brian will be like, "What are you doing? Shut up, stop it."
Oh, let's say shut up. But there is definitely an element of tough love. And trust me, it is the love aspect though, because I've wasted a lot of time looking at things that just don't matter in the market. Reading news stories. I haven't read a news story about a stock in decades. I maybe not decades, but quite a long time. I honestly, truly have not had CNBC on for at least 5 years. Not even for 30 seconds. I don't even skim past the channel. I wouldn't know where to find it. I don't know what channel it is locally. It just doesn't help me. It doesn't mean it's useless. It is to me as a trader because one, I find all my own ideas, and two, it makes me emotional when I see that stuff. I'm my worst enemy. If I see someone talking, if I'm bored during the day, and it's why I kind of avoid Twitter and chat rooms during the day, is I don't want to have more information thrown at me because I'm prone to get distracted. So it's a self-preservation mode as well.
I think that's one of the biggest things I learned from you. It's nothing indicator specific, despite all the great VWAP stuff and all the trading stuff. It's more about the style of your process, which is just know what you're good at, know what you're trying to do and what you're trying to accomplish, and say no to a lot of things or a lot of other information, or even like your universe. I think you're very just consistent in what you look at, what you go to. I just asked you about altcoins off air. VWAP looks great on these altcoins. I do stocks. Like this is what I do, that's it, and not going to pay attention to anything else.
Yeah, I like I said, I trade the big ones, and I used to trade some of the altcoins, and maybe I'll get interested again, but it's just a matter of where do I put my time? And right now it's just not in those. Maybe that changes again.
I love what you said about not having CNBC or any of the financial news on. I've got I've got a similar story, and this show isn't about me, but I feel like it's relevant. So I want to tell the story. I too don't watch the financial news anymore. I used to. I always had a TV in my trading room wherever I was, and it was always on, even with the sound on. Which
I was going to say, was it on mute though? Because
no,
that used to
I
be the
even
old way
had
to
the
do it.
sound on. I would more listen to it than watch it, right?
Gotcha.
But where financial news jumped the shark to me, and it wasn't even financial news that did it. It was, you may remember this, Brian, back in the great financial crisis, 2009, shortly, I mean, right around the bottom, I don't remember the exact date, but right around the bottom, do you remember when Jon Stewart on The Daily Show invited Jim Cramer on and just fucking ripped him a
I
new
do, yeah.
asshole
Yeah.
on camera in front of the whole world? And Jim Cramer, it wasn't his fault that the market was cratering, right? But Jon Stewart, and by the way, I'm not ripping on Jon Stewart. I love Jon Stewart, right? And I love Jim Cramer. But Jon Stewart just like laid into Jim Cramer like it was his fault. And to Jim Cramer's credit, he took it like a man. He took it all in. He didn't argue with Jon Stewart. He just kind of said, yeah, it sucks. The market's terrible, blah, blah, blah. And, Jim Cramer had every reason or excuse to be, to fight back and defend himself, but he didn't do it. And I think that was the right move. But anyway, when that happened, it angered me. I was just like, I'm tired of what's going on TV, like CNBC and Fox Business. Like all it is they have the Octobox on screen. They got 8 people screaming at each other all day long. No one's sharing any actionable ideas. It's just everyone's trying to be heard, and no one's getting heard because everyone's yelling. And as crazy as the market was at that time, it was such a huge distraction for me. I mean, I was struggling a little bit during that time, and like this was not helping me. And it was at that moment when Jim Cramer got skewered on Jon Stewart's show, that was like, all right, that's it. I'm done. I
Yeah.
canceled all my news subscriptions, like the newspapers. At the time, I subscribed to the Wall Street Journal, Investors Business Daily, the Chicago Tribune, 'cause I lived in Chicago at the time, and
Right.
Barron's. And I canceled all of them, and I got rid of the TV out of my trading office, and I haven't paid attention since. So
Perfect. This
there's my
is the
little story.
theatrics of it that kind of, I think, is what you're saying that ruined it. And, Jim is on that real far extreme entertainment aspect, theatric of it. And then, Jon Stewart tried to bring it back to reality, maybe just a little bit too extreme. And there was no common middle, I guess.
Yeah. Anyway, okay, so let's talk about that a little bit. Let's go down this road. Yeah, when people are struggling, when markets are hard, when markets are doing things that we're not used to or we've never seen before, you as a trader, when you find yourself in that situation where you're losing money or you're struggling, you can't make money, do you have any go-to moves that you go to just to kind of recenter yourself and get yourself back on the path that you know works for you?
The main thing, Sean, is I just will drastically cut my share size and figure I've just got to get back in my rhythm. Maybe it's, I can't look at what I do and just distrust my process that I've taken 30 plus years to develop. Instead, I look at it and say, okay, the market isn't favoring the way I'm engaging with it right now. Of course, I tear apart my trades and do all that, but I realize that it's just time to go slow a little bit. Ironically, here we are, March 21st. This, to me, this year has been a difficult market. Not difficult to make money necessarily. I mean, I'm making money, but to keep up with the market, to have exposure to the market in the quantities that, you look in hindsight, you should have. The market keeps looking like it's about to roll over. And I always say I'm cautious but not bearish. So that means I've got very little positions on, but that was yesterday before the Fed. I had 2 stocks long, and they counted for about 15% equity. So I was severely under allocated. And today I bought a bunch more stuff, but it's to me it's just take each stock based on its own merits. And as you were saying, at the beginning of your CNBC story, is that if it doesn't help you make money, then I just completely ignore it. I don't care. Someone mentioned to me today, they're watching carefully what the U.S. dollar does, and I said, why? I said, listen, with respect, why? How has it ever helped you make money? For me, the US dollar, like everything I do is dollar denominated. So when I buy Nvidia, it's versus the dollar. When I buy Bitcoin, it's versus the dollar. I don't have to know I'm inherently short the dollar in everything that I do. Not, so I don't care if it's going up or down because that is my benchmark, my ground zero. That's where I put, I don't diversify overseas. I don't feel the need to do that. I think I know we have the biggest, most liquid market, most honest accounting, and just all the reasons to invest in America. And this is where I live. This is where I spend my money. I don't spend it in, the dollar versus the, yen. It doesn't, that means nothing to me.
Like that. Spoken like a true patriot. But how about intermarket at all? Like, how much do you weigh or even consider what kind of environment we're in? Because sometimes if the dollar is weak or trending lower, you could argue it's a more conducive environment to be long risk assets.
I take each stock based on its own merits, and I am strictly bottom up, Steve. So I don't consider the global macro at all. I don't try to figure that stuff out. To me, every time I have, it's confused me. It's cost me money. Instead, I just look for setups where I can control risk, know where my risk is, know that once in a while my supposed control of risk isn't really there because we might get a gap. But I, diversify, position size properly according to my perception of the risk in the trade and in the market overall, and let each stock, each trade speak for itself.
If there's stuff that you don't love that's going on in the broader market, say price action at the index level, will you consider that and let it affect either your position sizing or how aggressive you are in your trades in the individual components?
Absolutely. So if I see the market is below all the declining moving averages and I see a stock that looks great on the long side, I'll still take that trade, but with much smaller size than normal. Just the same in this market right now. I think I've had 3 or 4 shorts this year, and they've all been very small size as this market goes up. I've looked at it saying, well, the market's a little stretched. This stock looks like it's ready to roll over, but the primary trend is higher, so I'm going to take a half a risk unit instead.
Oh, that's great. I love hearing that. So if you're looking at a setup, and again, the first thing for you is the individual stock. You don't care about the big picture. Just if XYZ is going up, I want to be getting long. But if the broader market is going down, then you'll take a half size position or a smaller position. You won't take a full position unless the stock and the market agree, right?
Yeah, unless there's something really that I love a lot. I mean, there's, there are guidelines, not rules to the market in my mind as a discretionary trader. So I try to stick within my guidelines, but I'm always willing to make exceptions for different levels of, hey, the Fed's coming out tomorrow. I love this stock and the trend is higher, but the Fed, I can't do that, in front of the CPI. I can't put on a full risk unit because it could be crushing in one day just to put on new stuff.
How many positions are you typically managing at any given time?
Generally, no more than 5 to 8.
And that's intentional. That's done intentionally. You don't want more than 8.
Once I start getting more than that, it usually historically has meant that we're getting near the end of a run that so many stocks are healthy that we need a correction. Okay. So I'll use that information and think, well, every time you have gotten excited in the past and had 20 positions, 9 out of 10 times we gap lower by 1.5% the next day. So you've got to use that. That's stuff you can't learn in a book. It's stuff you've got to go through the different cycles with. But generally also, it's more difficult for me to just, keep my focus on that many stocks. So if I see that many, I'll think, well, either I'm fully allocated or if I need more, I'll just add to one of these positions so I can watch it more carefully.
Have you felt that way at all recently, that things are frothy, you have too many positions? Just asking for a friend.
Yeah, I just probably a week and a half, 2 weeks ago. In fact, I was, this is why I don't take my opinions of the broad market very seriously. And what I mean by that is, I was looking at, I had two stocks pretty much double in the course of 3 days. One was SOUN, and the other one, I forgot what it was. It was another low price name. I was looking at going, two stocks doubling. I mean, I've had stocks 2 in 1 week is just, this is getting a little bit frothy. And then I saw a couple stocks popping up that looked like maybe they were short sale candidates. So I was looking at, and we're kind of flirting with the 5-day moving averages, flattening out. And I was thinking, this is as early warning a sign as I can see that something might be up in terms of getting ready for a little bit of a downside flush. And the next day it went sideways. The next day it started ripping higher. So I started buying more stuff and covered the short and said, my opinion, the market doesn't care what I think about this so-called, level down to the ground floor of the market to see what's really going on.
Yeah.
So Brian, our audience here at All Star Charts, you're a familiar face to most of our audience, but there's going to be people who watch this podcast this week, this month, next year, who maybe are just learning about you. So maybe we should have done this at the top, but let's back up a little bit. And why don't we tell people, well, let's tell people two things. Number one, you're an accomplished author, right? Your most recent book is called, I want to make sure I get the title right because it's a long title, Maximum Trading Gains with Anchored VWAP by Brian Shannon. Everyone I know has read this book. Everyone loves this book. Everyone's getting a lot out of it. So you're an author, but even before you were an author and a 30-year trader, what were you doing? Were you mowing lawns? Like, how did you get started in trading? Like, what was the thing that got you involved?
I've told the story before, Sean, about a stock called LoJack. So it was mowing lawns, caddying. I think I was a busboy at the time, and I had some money saved up and read about this, or actually saw it on television about LoJack. And I was living in the Boston area at the time. Boston was the car theft capital of the world, and LoJack had this new technology. They gave the transponders to the police, and the police, the state police, I remember they got in trouble because they were buying the stock. And I looked at it and said, my dad was into the market. I said, Dad, why don't we buy some of the stock? He said, okay. I had $500. The stock was $5. He said, we'll buy 1,000 shares for you. And, basically he gave me, 10-to-1 leverage. I didn't realize it, but he said, we'll make it an even 1,000 shares. The stock doubled in about 3 months. It went to 10, and for no other reason than it doubled. I was like, hey, can we sell it now? He's like, yeah, sure. So I made $5,000. I think I was 15, 14 years old. And
Huge.
To me, it was just, why would anyone ever get a job? So that got me hooked. And then right out of college, I went to a little schlock brokerage firm in Boston, then went over to Lehman Brothers, and really have had the needle in my arm ever since then. It's truly, an addiction, a passion, whatever you want to call it, obsession.
When did you know? Like, you were that young, it was just that first trade and you were hooked? Or
I think maybe not right away. But $5,000 to a 15-year-old in 1980, whatever it was, 83. That's a shit ton of money. And I just thought I was going to be the billionaire. I had been reading things, up prior to that, like Money Magazine. I remember getting I think it was kind of financial, I forget what it was called, but I remember seeing George Soros on the cover of it when he had first, made his first billion or so, and thought, wow, that's what I want to be. That's what I want to do.
Sean, I'm noticing two themes. This is only our third podcast interview, but dads are getting traders involved. No, it's the third one, I guess.
Yeah.
And Jay, uncle. And then working as a broker, at least early on, paying your dues, right?
Mm-hmm.
So
practicing with other people's money was great.
So what happened next? What happened from there? How long were you at the brokerage?
I started in Boston right out of college in 1991. And in 92, I moved out to Denver, stayed on as a broker for about a year. And then in 93, I started trading with a company called Generic Trading. They were one of these leverage, prop firms that advertised in the back of the Investor's Business Daily. Put up 25 grand, and we'll give you 250, $500,000 in buying power. 250 overnight, 500 intraday. So I saved my pennies. I quit my job. My wife was pregnant at the time. We were living in this crappy little house, and it was the right time to do it. Everyone would tell you it was the dumbest thing to do, but it was the smartest thing because I could recover. I was young enough to risk it all, basically. And I started trading at Generic, and was profitable 8 months in a row right away. Then I started a day trading office in Denver for a company called what the hell was the name of them? Landmark Securities. So I had my Series 7 and 63. I got a Series 24, which allowed me to become a branch office manager. So I opened a day trading office in downtown Denver and did that for 2 years maybe. And then worked with another company called MarketWise, created their educational materials, ran their prop trading desk after another guy kind of came in, promised things that couldn't happen. And so then I quit that in 95 or 6, 95 or 6. No, it had to have been, I don't know. Yeah, probably 98 maybe. I quit that and just started trading full time.
And when did you start letting the world know who you are and doing things on the internet and blogging and tweeting and things like that?
Yeah, so that company that I was talking about was called MarketWise. And MarketWise was, I kind of got known a little bit over there because I had a little newsletter at that company that I did. So
Okay.
once I left there, I got on YouTube right away. It was actually before YouTube existed. So I was recording videos and I was putting my videos on YouTube and I put them out there for free. And I, told myself, well, once I get 500, people average views on my videos, then I'm going to do a subscription and see if I can make that work. Bottom line was, though, I started getting up to 5,000 views, and I still hadn't done that because I didn't know, I didn't care about building a website and doing all the stuff behind the scenes. It was super intimidating to me.
Right.
I just wanted to be involved in the market, put on a headset, and talk about the charts that I see. So it wasn't until Howard approached me, Howard Lindzon at StockTwits, early days of StockTwits. That might have been 2004 maybe. He said, "Hey, Brian, you want to do a subscription? We'll take care of all the back end stuff." I said, "Great, let's do it."
So was it obvious back then, or was Howard just kind of like, kind of early in that sense? Like today, it's like if you have a big following, people know who you are. It's like, come on, man, like where's your website? Sell something, right? But back then, nobody knew what the model was. It was brand new, right?
It was brand new, and I was just willing to go along with it because I figured, I'm doing well trading myself. Anything I do beyond this is free money. I'm going to trust Howard with it. He seems like he's got the right people in place. I had been involved with his prior venture, which Sean, you remember the name of it?
Wall
The
strip.
Wall Strip. So I was involved with Wall Strip, and Howard early on said, "Hey, Brian, do you want to invest in this?" And I was thinking, no, I mean, it's weird. And then, like 4 months later, it sold at 10x. So I was like, all right, this guy knows what he's doing. He knows how to connect people. He gets the stuff out there. And, I turned the subscription on. I had my first book had already been out for about a year or so. And, that dovetailed well into it, that it just made sense. So I didn't have any idea of what it could be or where that industry was going. I see it changing all the time, and I'm still happy to be doing it.
So, Brian, you have been involved in trader education, whether directly or indirectly, for a long time. Whether it was when you were starting up those prop firms in Denver, whether you were doing a subscription service, or when you're writing books, you're involved in education. So, one thing I'd like to know, I imagine you get asked questions all the time from all kinds of traders, from traders who've been in the business a long time and to traders that are totally new. Like you come to my meetups in Colorado, you've met some of these newbie traders and you get some crazy questions every once in a while. Are there any questions that you feel like you get more often than you should and it really just annoys the hell out of you?
I think that, Sean, that even with a subscription product, I tell people, listen, here's the setup, here's the logic behind it, here's the way I see it. And I might talk about 5 stocks one night, and one of them might be a $3 stock. One of them might be an $800 stock. One might trade 20 million shares a day. One might trade 600,000. Somebody's always going to say, well, why'd you mention that stock? I don't like $2 stocks. Well, then don't trade that one. But people want to be told what to do. What annoys me more than anything after doing this so long is not any specific question, but the fact that people don't put very much effort into such a serious business, that they just are willing to be able to told what to do rather than, hey, here's how to think about this. Here's where the risk is. Here's where maybe you can split your risk. Here's why we're taking a smaller piece rather than, okay, but does that mean I should buy it then? And that gets me just exasperated. That is the stuff that, come on, I'm trying, back to what you're saying, Sean, teaching. I'm trying to teach you. And that to me, it's your money. It's your future. It's your retirement. It's your dream house, whatever it is. Take it seriously.
Sorry, Steve, let me just
Yeah.
mention this real quick because this just happened last night that a tweet or what do we call them now on X? Would we call them tweets anymore? Do we call them messages? Whatever. Let's just call it a tweet. Brian, you and I are both in Colorado, so this kind of hits home for us. Coach Prime, the coach of the Colorado Buffaloes, Deion Sanders, had a tweet out last night, and I retweeted it. I think it relates to what you just said. He wrote, and this is amazing, he wrote, "We're living in a time and era whereas most folks want the reward but not the work. The lottery will stay in the extreme millions because of the opportunity of the reward without the work. You will never have consistent success or achieve the reward you desire without the work." I mean,
love it.
You might as well be talking to traders, right?
Yeah, or anything really. I mean, why do 80% of lawyers suck? Why do 80% of doctors suck? It requires some work, and you have to care about what you do. Number one, you still have the passion, the addiction, the obsession, whatever it is. Some people, brand new into the market, 3 months in, they'll say, "This is my passion." I'm like, no, it's an addiction right now. You don't know it yet. It's just you're buying lottery tickets right now. You had a couple of them score. You haven't been tested in different market environments. Back to what Coach Prime was saying, the lure of the easy money is there. Get out there and do the work. Do it consistently. Do it on a very small scale. So that that kind of leads to another thing, Sean, is that some people will say, "Hey, I sold my business and I've got $10 million in an account. I'm ready to go." I'm like, okay, take $9,950,000 and put it in a T-bill or something.
Right.
Start trading with, even 50 is probably too much. Learn how to trade first. And in those people, I always I say to my wife sometimes, like, I'll complain to her a little bit and say, how does a person like this get $10 million in the first place? That sometimes is the most amazing thing, is that they think that they can take the prior success and turn their IQ or whatever it is, business acumen into trading. It's completely different than running any other business.
Is that whole thing why like doctors tend to make bad traders or investors? They don't know what they don't know. They think they know everything, so they can apply their intelligence from something else to the market.
It sure seems reasonable to me. Yeah, that you think you're at the high end of whatever field it is, that you can just translate it to something else.
You probably see a lot of frustrating things, people doing the wrong thing. How often do you see somebody who comes maybe as a client or just somebody you're talking to or meet on Twitter that does the right thing? Like, how, as humans, how bad are we?
It's probably the Pareto principle, the 80-20, that, so 20% of people. So what I like to do with new subscribers to Alpha Trends is do a half-hour one-on-one with them to try and get in their head and see how I can help them best and let them know how they can make the most out of the service and that sort of thing. Is And once in a while, people will just ask the right questions, and I will tell them, listen, I believe in you. I don't say this a lot, but you're asking the right questions. You're not just saying, hey, okay, but where do I buy? And anticipating price action rather than always being reactive to it. So Sean, that's one of the questions that's most frustrating for me is people asking about a stock that is, generally it happens. I don't know why, but it seems like after a 3-day move of 10% that in XYZ stock, the next day I'll get questions. Hey, what do you think about XYZ? And my mantra is, where has it come from? Has it expended a lot of energy getting to the point where it is? Where does it have the potential to go before it's likely to encounter some supply that might become resistance? And is then the potential risk worth the reward? Or are you chasing here? And most of the time it's chasing. And some stocks will go up 20 more percent in the next 3 days, but that's the exception. This market is probably once again creating bad habits for people, thinking that they don't have to have stops, they don't have to manage risk, and they can just buy more and it'll automatically go back up. So it's human nature. It just repeats over and over again.
All right, Brian, let's get real here for a second. Tell me about the last time you just lost your ass. I know it's happened. I know you've had some bad runs. Tell me like what happened. Where did you go wrong? Where'd you get derailed?
Okay, it's more recent than I would like to admit, because truthfully, it used to be up to about probably 8 years ago. I used to have like one trade a year that I would just blow up in, and I would get stubborn in and not adhere to my rules. I would average down in it, and it just dumb shit like that. This one in particular. Was it's actually very fresh. It's this month, and it's too fresh to admit the stock or what I did with it.
Uh-oh.
The statute of
guesses,
limitations hasn't run out yet. But a group was hot. I'll just say it was the AI group, and there was a little stock, Ribbit. That's a hint. But I got croaked in it. I averaged down, and then I just, I pulled the Band-Aid. I set back pretty much. Well, yeah, I did. I set back my entire month of March because I haven't recovered yet.
So this brings a good question. You were getting your ass handed to you in this trade. You did everything wrong.
Yep.
What was it? Thinking back on it now, what was it that finally got you to say, enough is enough. I'm out. I'm done. Like, did you just finally have like a come to Jesus moment where like, what am I doing? And you just closed it, or was there something
kind of that, Sean? I mean, I knew I was wrong, after holding it for 2 to 3 days. I was sized up in it. I was going for a home run. I'm up good this year. Like I said, it hasn't been my best year start compared to what the market's doing, but I was kind of swinging for the fences, thinking, all right, now I really got to go for it. And the problem was I got involved heavy right on, which I typically do, but it went immediately against me. And I figured, well, I can't cut it right away. And when I mean immediate, like almost within 10 minutes. And for some reason I froze. I don't know why. And then I think the next day it, hit some perceived level of support, which wasn't support. It was just a level of interest. And I bought more. And the next day it went down. I beat myself up. The next day it went down again. It got a little bit of a bounce. I was like, screw it, I'm done. And real good thing too, because it continued to go down. It would have been much worse, but I had too much size. I averaged down. I was kind of looking for a leverage type of play in the AI group, which was hot. I had a little bit of FOMO for letting go of NVIDIA early. So all those things kind of played together emotionally. And then I just plain old fashioned froze.
You keep saying that you average down when talking about what you did wrong. That might be counterintuitive to some people, especially people who don't know your particular trading style. Why are you so against averaging down, and why is it something that you do so rarely?
Well, I go into a trade and I think, in terms of if then, if I buy it at 25, well, if it goes up, great, my price target's higher. But if it breaks that higher low at 24.60, I'm going to get out. Well, it immediately went below 24.60. I'm making these numbers up. And rather than just selling immediately and taking that first small loss, I let it go that day, figured, well, maybe I get a bounce tomorrow. Instead, I think it gapped down, continued lower, and I was like, well, I can't sell it now. It's down too much already. Then the next day it went down. I said, all right, enough's enough. We're gapped up a little bit. I don't remember what it was, but I just puked it and said, so I'm not a person who buys the dip. To me, I don't know. You don't know till after the fact it's the dip. You'll see me, and I know you guys know this. I put it on Twitter all the time. Don't buy the dip, buy strength after the dip. I think it's a chapter in my book about that. In fact, I think that's exactly what it's called. Don't buy the dip and don't sell the rip.
After all these years of trading, you still sometimes break your own rules.
It's really, the thing is, I thought I was over it because it's truthfully, it's been about 4 or 5 years since I've done that. And I thought, hey, cool. I can beat human nature.
No, this is so important because, Brian, you're an accomplished trader. You've been doing this a long time. You make a living from it. But even the best traders in the world, we still fuck up. We're still human. And what the difference between a trader like you and, say, the average trader is that you bounce back from it because you've got the tools that you've honed over the years and the best practices that work for you. And you know what they are. Even when you're screwing up, you know what your best practices are. And for whatever reason, because we're human, we get off centered a little bit and we deviate from the plan. But the fact that you can pull yourself back and get back and focus because you know what works, you have a track record of knowing what works, your ability to do that is what separates you from 80% of traders, right?
It doesn't make it any less annoying, though, Sean. In fact, it might make it more annoying because you think you've got it beat, and then all of a sudden, out of nowhere, it comes up and gets you.
Right. And I imagine it has to be extra frustrating for you too, because, you're a trader. We know that. But you also are someone that people look up to. I mean, Straza calls you a mentor. You were a mentor to him. People rely on you to learn. They read your books. You're an expert. So it's got to play with your brain a little bit. Like when other people look at you as this guy, who has all this wisdom, and yet here you are making just the basic dumb mistakes that everyone else makes every once in a while. That's also got to be another, mind trip for you.
I think, they talk about the, what do they call that? I know the name of it, imposter syndrome. It brings that up. It's
Sure.
like, okay, yeah, do as I say, not as I do. Fortunately, I didn't tell anyone I was in that trade. It was my little secret trade to the side where I had, leverage because I knew it was a dangerous stock. I knew better than to bring it to people. I only bring ideas I think one won't hurt them badly. Kind of like, going back to doctors, first do no harm. I don't want to set them into a stock that's so speculative. So I was like, well, I'll just keep this one off to the side for myself. And then I broke every rule in that. And truthfully, it's, the same as we were talking right from the start, tough love. I got exactly what I deserved. I deserve to lose my money. And I think that everyone gets what they deserve. Some people say you get what you want from the market. I don't think anyone really wants to lose money, but you definitely get what you deserve for going in with too much money, not knowing what you're doing, selling your business for $10 million and starting to trade with $10 million rather than learning first. You get what you deserve for your stupid mistakes. Once in a while, a random event occurs, but those are pretty seldom where, the company, gets raided by the FBI or, even a low priced biotech stock. Oh, I got blindsided by an FDA. No, you didn't. You should have known the FDA was coming. And if you knew something about the science, then you would have hedged yourself or placed the bet somehow or, just stayed away from it. We definitely get what we deserve.
All right, let's take this in another direction here. You've been trading for 30 years. You've had success, you've had some failures, you've made all the dumb mistakes that we all make, but you've also done a lot of the right things. But one thing you haven't done yet, Brian, and I'm wondering if you've ever thought about this, is when are you going to hang it up? When are you going to quit? When do you
Uh,
know it's over? Have you
yeah,
ever
like
thought about that?
I don't think you do if it's really in your blood. I mean, you scale back certainly, and you know, I've been thinking lately about. So I'm 56 years old. I'm still healthy. I'm still relatively young, but I enjoy it, and I also enjoy helping other people and teaching them. So, you know, if I lose my passion for it, then I would probably struggle with that for a while and delay what should be done quickly. It's like, you know, my first marriage, that was over 3 years before we got divorced. So hopefully I don't make it more graceful than that. But as far as being out of the markets, I don't think I could like retire like a physician stops operating. I don't think a trader can stop trading.
so you keep going back to the importance of passion and how that's really the root to your success. What excites you today? And is it the same kind of stuff that excited you when you were getting started 20, 30 years ago?
You know, I like to be right and make money. I mean, truthfully, I mean, there's ego there for sure with any trader. You know, like I like to be right about things. It sucks to lose money. You know, beat myself up like anyone else does. I love to see, you know, in the last few years, it just it to this day. I mean, it just last night I sold Bitcoin because it came up to a VWAP that I had bought 2 days prior because it was at a VWAP. And it just blows my mind that it reversed at both those places. You know, I was you know, putting it on Twitter, on YouTube saying, if it comes down to this 61 level, it's got this VWAP, I'm going to be buying there. I bought there. I was like, man, should I be buying? And I knew the answer because yeah, if you get out and take a loss, but it just went instantly to 68,000. And then I sold it at 61. It pulled right back to 65, exactly to the VWAP it was supposed to.
So you're a very accomplished man. You've written books. You've created your own indicator. Is that
I didn't create it.
feeling is that feeling better than anything though? Like what are you most proud of when you're actually watching a chart live react to the anchored VWAP? That's got to be the best feeling, no?
It is. It's really cool. I mean, I'm looking at a chart of that Bitcoin right now up there, and it blows my mind. It gets me excited, and it's just really, you know, every time anyone gets involved in the market, you look at every oscillator, every indicator, every relationship in the market, and at some point when you study the MACD, you figure the MACD is it. I've got the market solved. You figure this moving average crossover is the one, and I've got the market. This riddle is solved, and I've been through all that stuff. But this time, it's as damn good as it's better than anything I've ever looked at, and that I use to trade each day. And you know, I'm screaming at the top of the lungs and my lungs, and some people say, "Yeah, but your book's $59. That's too much money. It should be $5,000."
Uh, yes, if I had the soundboard going, I would hit the one that goes, but
You know, that's funny you say that. I saw you tweet something about that recently, Brian, and I had a chuckle when I read it because I always think about when I hear people blanching at the price of something that would help them be a better trader, right? Whether it's $100 or $200, I always think to myself, well, aren't you risking 100 or $200 at least on every trade you put on? Just think of it as a trade, and if it works out, fantastic, and if it doesn't work out, well, it's just like a lot like any other loss.
A stripper knows she's got to pay 5 grand for her boobs. It's a good investment.
There's our money quote right there for the podcast.
speaking of money quotes, I want to take it back. Earlier in the show, you said so quotacious sometimes, man. You said if it doesn't make me money, I don't pay attention to it, or I don't want to know about it. What things outside of price? We all know about price and trend following and AVWAP. What kind of things help you make money? What do you pay attention to outside of the technicals?
Not much of anything, truthfully, Steve.
Earnings?
What?
Earnings,
I
like
mean, here's the thing. I view the fundamentals of a stock exactly the same way I view the technicals. That I know other people are going to react at certain places. I know that there's certain catalysts. I do like to see a company with all the O'Neill stuff, great revenues and great earnings, and not because I care about the company or that I believe that I've picked the big winner because these guys are reporting earnings and revenues that are strong. It's because I know there's 1,500 growth funds out there or whatever the number is, and they're all looking for the same merchandise. They're looking for the stuff with consistent and growing revenues and earnings. So when I see a stock setting up with those fundamentals, it gives me a little bit more confidence to say, I know there is a pool of buyers that are interested in this. Unless something changes dramatically with their fundamentals, which is typically an earnings report, and I'll get out of the way for those most of the time, then I just look at it as, it's the perception of other participants. How are they going to react at that anchored VWAP? How are they going to act at that 50-day moving average, let's say, or how are they going to act in a stock with no sales and earnings versus a company that's growing their revenues 300% and their earnings are up 850%? That's going to attract more buyers naturally.
yeah, that's an important connection to make because a lot of technicians will come on here and say, oh, I don't care about fundamentals. Of course you do. What you just explained is that in most cases, the fundamentals are driving the technicals. The fundamentals are what's creating the demand for the stock, right?
To a degree, but I would also just put a footnote on that, Steve, is to say that, the technicals lead the fundamentals, the reported fundamentals.
Why do you
The
think that
real
is?
homework, what?
Why do you think that is? People know things. Like how do the technicals
It's
lead?
delay in the reporting.
Because they're doing the homework. The market is, as they always say, is a discounting market mechanism. It discounts where it is today and anticipates what's going to happen in the future. What's going to happen in the future when the Fed does cut rates? I would bet that we will see an immediate sell-off, pretty large, just because we've been anticipating this rally for the last 6 months, and the cuts, that is,
Tell the
and
news.
we've been rallying on that. So, in the case of fundamentals, you've got hedge funds, you've got well-connected other institutions that will get on the ground and they'll go toward the factory and they'll see the stuff going out and they'll say, wait a minute, your sticker company that you order stickers from says you ordered 10 times as many stickers for your product. How are you going to ramp this up? Well, we've got this manufacturing facility over here. We think that's going to fire up in 2 months and then we're going to sell it. And they're like, okay, so in 6 months, the earnings are going to be great. Let's buy this stuff now. So when Joe Q Public finds out how good stuff is, we've already been buying this stock. We're long a shit ton of it and we'll start feeding it out to the public.
Do you feel like that's going on too much today in some of these AI stocks?
That's not for me to determine. I don't know. I mean, as long as the trend is there and you can control risk, that's really all that matters to me.
Yeah, this AI thing is something else. I mean, is this going to be the new internet boom? Are we just getting started here, or is this a little bit of, a little bit of overhype, and it's just really just going to be the big players that we already know that are going to have the most advantage of it?
It's probably like the internet boom, Sean, 98, 99, something similar to that. You're going to have your broadcast.com, and you're going to have a guy like Cuban sell out at the top.
Shout
Then
out
you're
Mark
going to,
Cuban, one of the best trades of all time.
absolutely. And then you're going to have, pets.com or whatever it is that or groceries.com or the 900.coms that failed to turn into anything. So it's up for, and that's the beauty of the market. It's the market's job to determine, and it's our job to manage risk and get out of the way if the market says, wait a minute, something's changing here. We're now in a downtrend. Don't hold on to your thoughts of the market. It's the market is, all knowing.
Straz, are you familiar with Mark Cuban's broadcast.net trade that I was talking about?
No, I don't know anything about
One of
how.
the great, I think it's one of the greatest trades ever, and certainly of the dot-com boom. So this is where Mark Cuban made his fortune. He started an internet company called Broadcast.net, I believe was the actual name, right, Brian? Is that right?
Yeah.
Broadcast.net. It was like the precursor to YouTube. It was kind of like the first company that was streaming video on the internet. And he sold the company to Yahoo. Yahoo was the poster child for the internet stock boom, right? I mean, that stock went from like $4 a share to $400 a share in a span of like 2 years, something crazy. And he was paid by broadcast.com, or he was paid by Yahoo for broadcast.net, not in money, but in shares of Yahoo. And so what Mark Cuban did, which was brilliant, was, I mean, within weeks of the top, he couldn't sell his Yahoo stock because it was tied up. You know, he had like a year waiting period or whatever it was. Instead of doing that, he did what is near and dear to my heart as an options trader. He put on a classic collar spread, which locks in your gain. So he sold upside calls against his long Yahoo position and used those proceeds to buy puts, and that locked in his price. So Yahoo stock could have gone to $1 million a share or zero, which is closer to where it went, and he locked in all his gains. And you know why he put that trade on, Strazos? Not because he thought this was the top of the internet boom, although he probably had an itch that perhaps it was close. But this is a very refreshing tale. He was like, I just made life-changing money.
Yeah, don't
I don't want this to go away. And that was it. That was the reason he put the trade on. Genius. And then he goes and buys the Dallas Mavericks, and now he's the Mark Cuban we all know. But I just love that story.
That's pretty good. I had no idea. I didn't know he was an options guru.
I didn't know that either, Sean. I kind of remember hearing that. I thought he had just sold the stock and got money, but I didn't. Yeah, that's pretty cool.
No, he couldn't. He couldn't sell the stock. I mean, he couldn't sell it right away, so he put the options collar on to lock in his price. It was genius. Yeah.
Life-changing.
All right. Well, Brian, we promise you we'd only keep you for an hour. We're starting to run up against the hour here. We could obviously talk for hours, and we have talked for hours. But Straza, I know you have like a whole list of questions. So if you got a couple more that you're itching to ask, let's get there.
Not really. I mean, we're gonna have Brian back. I think this is a good place to end.
Okay.
Wow. All right. Well, Brian, last time, well, not last time, but was it now 3 years ago now, Straza, pre-COVID, maybe it was 4 years ago now, you guy, All-Star Charts and Alpha Trends teamed up. We did that event up in Breckenridge.
All right.
The Chart Summit. Man, that was a lot of fun. We got to do something like that again.
Why doesn't Brian meet us in Sonoma? We're coming to wine country?
What's going on there?
Yeah, that's the move. What is it? What's the flight, Sean? An hour? You're right there.
There's no direct flights, which is a pain in the ass.
We're going to Sonoma.
We'll talk offline, Brian.
Okay.
But the whole team's going out to Napa or to Sonoma in May for a little client event that we like to have special guests, and maybe Brian Shannon should come out, huh?
Nice.
Yeah. All right. Well, Brian, thanks for being a guest on the Off the Charts podcast. This was we want to have these conversations where we're talking to real traders, but we're not talking about trading specifically. We're not talking about ideas. We're not talking about chart setups. We all do that all day long. But you're a regular guy in our circles, and people know who you are, but they don't get to know necessarily the real Brian Shannon behind the scenes. So I'm glad we were able to at least touch a little bit upon that for people. And I know I speak for Straza, but we're happy to call you a friend, and thanks for being a part of this great community that we're all part of.
Likewise, guys. A lot of respect for everyone over there at All-Star and what you guys do.